So I see that you are increasing your buyback, increasing your dividend. I wonder how much pressure you felt as a business to increase those payouts to shareholders.
Well, Anna, good morning, and thanks for having me on. Look, I think the results this morning are really on the back of a number of things. I think our team has done a great job in the past quarter, and we have taken the decisions that you've just talked about, and they're really based on three things. Number one, Anna, it's the underlying performance of the business, which, if I can say, has been strong in the quarter. We delivered our cash cost savings target 6 months ahead of plan. We actually had the strongest convenience result in this quarter in our history. So the underlying business, first and foremost, is performing very well. Secondly, Anna, the balance sheet continues to strengthen. This is the fifth quarter in a row where net debt has come down now to $32.7 billion. And thirdly, it's about our confidence in the outlook for the environment. So when you look at it from that dimensions, they're the reasons that we've taken the decision that we've taken. $1.4 billion worth of buybacks in the third quarter and a 4% rise to the dividend. And actually, as we look out, Anna, over the next 5 years, at an oil price of around $60, we have the capacity to raise that dividend annually by about 4%, as well as, by the way, $1 billion a quarter approximately of buybacks. And that's about $4 billion a year at $60, which is probably 5% of the market cap of the company today. So that's really what this is about.
OK, and you've increased the dividend and you're doing this share buyback. I think you've said in the past that any excess cash would go in share buybacks and not in an increase in the dividend. So is this a change of position on the dividend? Why that change in thinking?
So our financial framework, Anna, remains exactly the same. There are 5 elements to it, and the first priority in our financial framework is a resilient dividend, and that absolutely remains the case today. And priority number 5 is that we'll distribute excess cash, 60% of excess cash, to our shareholders in terms of buyback. What you're seeing around the dividend is really a story of confidence. It is a story of confidence in the underlying performance of the business. It's the confidence in the balance sheet. And 12 months on from when we laid out our strategy, of course, the world's in a very different place with the environment. Global GDP is now back to pre-pandemic levels. The vaccines clearly are working. People are back flying, not to the same extent, but they're back flying. People are back driving. Not alone that, but we're also seeing OPEC Plus has maintained strong discipline. And then, Anna, in the US shale business, which has typically been a huge responder to prices, you're seeing a different business model emerge there, where cost of capital is higher and investors and operators are being much more disciplined and focusing on cash. So it is a very different world, and that's why we've gone ahead and made the decision that we've made around the dividend.
So you say it's a sign of confidence that you're returning all of this money to shareholders. Does it reflect, or perhaps you can tell me it doesn't reflect a lack of opportunity to invest in renewable assets at the right price? Because you've told us in the past how you'll only invest in projects that do meet certain criteria. Are there a lack of investment opportunities?
No, it's a good question, Anna, and the answer to that is no. There's an enormous opportunity out there, and our job, of course, is to pick the good ones and pick the ones that make our returns threshold of 8 to 10% in that new world. What we've seen in the last 12 months since we've laid out the strategy is we've doubled our pipeline in renewables up to 21 gigawatts now. We've gone from basically nothing in offshore wind to 3.7 gigawatts a day. We've driven our number of electric vehicle charging points up by 35% to over 10,000. So it's about returns and returns discipline. We've actually turned down 50 gigawatts of opportunity just in the last quarter. So there's no shortage of opportunity. This is about being disciplined. But the cash being returned to shareholders in terms of buybacks is exactly what we said we would do 12 months ago. We said that we would distribute 60% of cash to shareholders. We're now at a time when our costs are coming down. New production is coming on, 200,000 barrels a day of production over the last year, higher margin production. best convenience result on record. And these are the reasons, coupled with a strong environment, where we're in a position to do what we said we would do, which is to return that cash to shareholders. So nothing has changed from that perspective.
So nothing's changed from that perspective. It's what you said you'd do. What kind of soundings are you getting from those shareholders, Bernard, about what they want? This is what they want, I assume. Are you getting the sense from shareholders that they won't stay with the sector, perhaps, unless it pays out large amounts to shareholders? Because, you know, from a general sense, we certainly talk to a lot of shareholders for whom oil and gas are not particularly loved sectors at this time.
Look, I think shareholders want us to do what we said we would do. And what we said we would do, Anna, is that we would perform while transforming, deliver for our shareholders today. And that's what this quarter's results are predominantly about. And what I mean by delivering today, it is about distributions, and it is about returning that excess cash, and it is about the dividend. The dividend is very important to our shareholders, and that's why we've taken that step. It's about doing that while we transition the company for tomorrow. It's not an either or, it's an and conversation. And I think the results show that we are performing today, and we are transitioning the company step by step, day by day for tomorrow. And I've talked about the things that we're doing around renewables and charging points and so ever. So I think investors are, I would say, Anna, increasingly confident in the strategy of the company. Clearly, that performance today matters. And that's why results like these are so important. I'll just remind you that at $60 a barrel, we think we can do about $1 billion a quarter of share buybacks. That's $4 billion a year. That's 5% of the market cap of BP as it stands today. So these are very, very significant numbers.
Can I ask you, Bernard, how the trading part of the business is going? You don't always break that out in great detail for us, but you did tell us last quarter that trading had been exceptional. If that was the way you'd characterise it last quarter, how do you characterise this quarter?
It was a good quarter in trading, a little bit extra good in gas and a little bit less good in oil and products. But second quarter, or the first quarter, was indeed an exceptional quarter. This was a good quarter. It's a key part of our business. BP, I think it's fair to say, is one of the largest traders in the world. And as we head into this new world, Anna, which the world of renewables, the world of net zero, it will be increasingly important for a company to have a trading capability so that we can give customers what they want, the type of energy they want, in the currency that they want, maybe at fixed prices or floating prices, maybe with carbon offsets. These are the types of things that customers want, and that's what our trading business has delivered and will deliver increasingly in the future. So a good quarter for trading, a fundamentally important part of the company's strategy going forward.
I wonder where you see oil prices heading, Bernard, and how you think the Delta variant might impact the business, just finally, because oil prices, you mentioned $60 a few times through this conversation. Maybe that's the number you're using for planning. But the Delta variant, clearly a concern for some. What impact is that going to have on the US economy, on China? Are you seeing any impact from this latest wave of COVID, or is it too soon?
It's probably a little bit early. We are seeing probably a slight muting of demand globally, but I'm talking about a very slight muting of demand at this time. The main oil demand regions in the world, as you know, Anna, are the US, Europe, and China. Vaccination rates are relatively high in those economies. And of course, the Delta variant and how resilient the vaccines are to that Delta variant is a key question. We have indeed raised our planning prices to $60 from about $50 in the near term. That's on the back of what we think is strong demand. So the global economies have indeed recovered, with GDP back now to pre-pandemic levels. We do have OPEC Plus, which has remained very disciplined and has demonstrated both the capacity and the desire to maintain prices at a reasonable level. And we're seeing that in the market today. today. And then we have the US shale, which is adopting a very different business model. So there are, of course, uncertainties, and that's why we're very focused on the balance point of the company, the point at which the company breaks even, so to speak. And we're running that for BP at around $40 because uncertainties certainly remain, but we are increasingly confident in both the underlying performance of the company, the balance sheet of the company, and the outlook for the environment.